Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 7th. Today, we didn't have any big economic data, but we got Fed Chair Jerome Powell testimony at the Congress at 10 a.m. And oh boy, he said that interest rates are likely to be higher because the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rate is likely to be higher than previously anticipated. We have been talking about that in this channel regarding the interest rates futures that are pricing in 5.5% in September. That means that we are going to be higher longer. In December, the estimate were around 5%, but I mean, we are moving now in the range of 5.5, 5.75. The speech comes with markets generally optimistic that the central bank can tame inflation without running the economy into a ditch, into recession. But, however, we have covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. The PCE, personal consumption expenditure, the preferred metric for policymakers, is still at 5.4% annually. That is key for them. So where are we right now? Well, he said that there is little sign on disinflation. This is what killed the market. When it comes to the important categories of spending, excluding housing, food and energy, this is an important qualifier that says that inflation is still with us, higher than ever. So be careful because the 25 basis points could become a 50 basis points. And this is what exactly analysts are expecting. Look at this. We were one day before at 68% or 25 basis points. Today, it's the other way around, 66% with probability of the 50 basis points in the next interest rate hike. And look at this, the probability to be in November, December at even higher rates without any cut is almost 100%. We are moving towards 550, 575 in March with 35% of probability. I think this is going to be insanely high, and this will destroy the economy to points that no one ever expected. And more than that, the SOMA, S-O-M-A, the account holding, this is the quantitative tightening that they are doing. QT, they are still doing it. $32 billion. Again, they are selling securities. Since this was March, February was a little bit, but as you can see, they are continuing doing since early this year. They are doing QT, quantitative tightening. They are selling their securities. As they promised, they need to stop injecting money and supporting the economy. So that's why they are releasing their holdings. This is bills, notes, bonds, securities, everything that they purchased during the economy pandemic and that period. So this is why we are actually down. This is as simple as that. We opened, this was only the people that thinks that this is a move to the bullish side was caught in this, but as long as the statements were released, my God, what is happening? As soon as the statements were released, this market dumped. We tried to move higher, but then Powell said again that there's still no signs of disinflation. We are more or less holding, we were, as you can see, trying to hold this I don't know what is happening, but this move is insane. So let's see the pullback, because this level, the pre-market low and the prior low, this was the really interesting pivot in here. So this is going to be really important. Or this is going to be the spot. I'm not going to buy this. I will wait for the pullback, because this is just coming from nowhere. Is there any news? Is there any news? Nope. No. He's still... So is he? No. He's already done with the speech. So let's see what happens. This is actually, anything can happen. Okay, look at this pump. But well, let's continue talking about that. Well, the hawkish speech of Jerome Powell is undeniable. Dollar is moving higher. Look at this. Dollar is trying to push 105. The 10-year yield is pulling back in the negative. This means recession is in the minds of every bond market trader. And yields, look at this. This is September yields, 5.62% green today. And the inverted yield curve, look at this. This is undeniable. Look at this. You cannot just ignore this. Everyone wants to be bullish, but this is the evidence that different markets, different indicators, different sentiments are pointing towards gain in the short term. I think markets sooner or later will just do something like this, and we will be just pointing towards this kind of, yeah, it could be like that, something like this. This is really probable. If you just analyze this chart and you try to not to form any personal bias, just see technicals. This blue dot line was last week high, and we rejected it yesterday. Yesterday's move caught a lot of bulls by surprise. Everything was super bullish, and then we rejected heavily. And right now, we are, after Powell's speech, trying to move again higher. I mean, there's nothing more nasty than a bull trap. And I don't want to be caught on that. I will just wait for my opportunity, because everything is red. The only things that are green are yields pointing towards more pain, more fears of recession. Dollar is up. A lot of people moving on cash. There's a logical factor in here that shows you that more pain is to come, and you cannot just ignore that. And let's see what happens. But this week is going to be even more important. Tomorrow we have jobs openings. We are expecting less job openings. Let's see what happens. And again, another testimony. Oh boy, this is going to be huge. Thursday, a little bit of relief, jobless claims. And on Friday, again, big one, non-farm payrolls and unemployment rate. And we will need to pray for these numbers to be really on the good direction Fed is expecting, because if not, most probably, I'm going to tell you, markets will dump. And this is my opinion. Let's see what happens. Let's see what happens, actually. because anything can happen, and you know that. And in order to be successful in this kind of markets, you have to be patient. You have to react to price action. You have to form and analyze different markets, find confluences, and basically be able to just digest all the information and try to do your best. This is my advice. And I think this market is unbelievably dangerous and really, really difficult to trade because no one has ever experienced these kind of things. So we have to wait and see what happens, because anything can happen, as I was saying. And I will just call it a day. This is really, really interesting price action breaking this pivot. Sorry, this descending resistance after all day. We'll have to see what happens here. Here is the real deal. There will be a lot of sellers basically at these levels. So be careful, because today is still going. And as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time. As always, the trading day is not over yet. We are experiencing a lunch hour push, but be careful with this level, with these levels. This is really, really dangerous. Discipline and risk management is what is needed during these times, are key for just success. Stay safe, everyone.